Good afternoon, everyone, and welcome to the FX Daily Roundup. It's relatively quiet today. Um, U.S. bond markets are closed. Now, FX obviously is still open, but it's certainly the bond market being closed is impacting some of the other markets. They're trading relatively quiet overall. We have seen crude come into a pretty interesting area here, almost to the 61%. It's been dripping a little bit lower really since the opening, and that was a good area, that $55. We've been dripping a little bit lower, coming to a decent area, but once again, I guess markets looking at lack of participation, we're kind of bumping around here. One market that we've been looking at over the last few days has been this peso, and we discussed on the European crossover webinar. I'm looking for, you can see here on the bias chart, we're looking for this market to go on and come down here to 1923, and that's the breakout area. And the whole deal with this, the peso, I was telling folks, is when we broke out, we really we tried, we finally broke out, and we really made a phenomenal run. And on the way back, I kept the bias bullish the whole time, saying, hey, you got to give it the benefit of the doubt. It went up to 19, as we had the breakout, and so we did hold this key area here, which was at 61%, and from there it wasn't didn't take off like a rocket, but it finally started taking off when we were looking for a move of to about 1982, 85-ish. On that day, we had actually bumped up our resistance to like 1986. I think it came close, didn't quite hit it, and we're looking for a pullback, but we're thinking, hey, look, it should hold around 1960-ish, around there, and we broke a little bit lower than we would have expected. So, okay, fine. They kind of moved up here, and then they just kind of ran out of gas. I'm like, well, wait a minute, this thing really needs to hold the 48, and if we lose 44, that's all she wrote. We're just going lower. And sure enough, they lost the 44, and really that opened the door for us to go to new lows, which we did on Friday. And you can see here we're now testing the breakout area here, which is the 1923.6, which was just absolutely huge. We may see a little bit of a bounce from that area, but I mean, that was obviously an area that they're going to go in and target now. The breakout area after failing here at 44, and basically, hey, you know what? That's it. Bulls can't hang their hat on anything. And even also this morning in the European crossover webinar, we changed the bias here to bearish, looking for that to test 1923. On the Asian weekend analysis, we're looking for potentially beyond that, looking for a move down to 1916.08. You can see that in the notes, but for them to go in and challenge, or in this case, test that 1923.6. I think you'll see a bounce from there, but this thing's a sell afterwards. Well, it has been a sell, after it lost at 1944. We have seen cable kind of bounce around. Obviously, we had a pretty good strong rally. We came back down here, and I guess we'll go and move into the daily. So the analysis here was, on the way back down. Well, it said the cable fierce rally took out the resistance at 26.02 on its way to 26.72, which was at 50%. The immediate resistance is the 26.92. If we opened higher on Sunday, we didn't push any higher. Trap shorts will provide a solid bid on pullbacks to 25.42, and I think the low was like 25.17, so it wasn't too bad. We rallied up, and of course they ran out of gas up against this 26 area here. You can see they've moved up, challenged up here. We actually had a level right up in here, and we've paired back. Dollar-Yen still pushing a little bit higher, but the bias chart resistance we have on here is 850. Aussie dollar just opened and lower and just kept moving lower, but we've kind of rebound just a bit. There's nothing of any real substance when we're looking here at the euro. We'll move into that. Okay, here was the analysis over the weekend. Euro closed above key resistance level 1020 last week with the aid of the sell-off in boons. Remember, I kept talking about the boons. We were expecting a big sell-off in boons. We said, hey, be careful. This is probably going to provide a bid in the euro. And we saw that come to fruition. There's potential to 1113. You see the 1113, the pink line. 1083 is a 38%, which confluences with 1075. On the pullback, we're looking for 1007. followed by 980. So we haven't even made it to the quite to the 1007. Low's been 1012. Well, that's not too bad. That's where we stand. But we, by taking out that 1020, we were also able to break the downtrend line. So the door's open for them to move higher. We'll have to see. Boons have actually come back a little bit. So we'll see what happens there. But I think we have the potential to move here. Looking at the cash dollar index, once again, markets are trading relatively quiet with U.S. bond markets closed. I think that, they're digesting the news of this China thing, which I kind of call like a fake headline. What Trump likes to talk about, I call that a fake headline. We know that's all fake. I mean, you didn't, with all the trouble they had, they were going to resolve it in 3 days. Now they have this thing called phase 1. So we'll get to that. But I'm saying is I think the markets are allowing that to digest, and with bond markets closed, we're just kind of holding in tight. I mean, we did see a quick sell-off in the cable. Finnish minister came off saying we need more time. Brexit negotiations with UK need to continue after the EU Council meeting. There's no time in practical or legal way to find a Brexit agreement before the EU Council meeting. So that we saw a quick drop, and then we kind of saw this bounce back, rather quickly. We'll go on to move into another chart with another page, I should say. Hang on, another screen. So one of the things we're looking at for a technical level here was this 78%, which actually confluences here. You see all these touches with the body. That was an excellent area, and we saw the market pair back on Friday. I think right now, if you're looking at resistance, and of course it's the SP cash, is going to come in right there. 29.75. Well, that's not even that far away. So like I said, I think we'd have to, get a 2-hour close above there to try and move this market higher. But, once again, after the market has a chance to digest, obviously bond markets close, it shouldn't have that much of a difference. But that being said, with them digesting the news, things are trading relatively quiet. Joe Perry was saying, which was a good point. He said, hey, watch out for earnings. We'll have, quite a few earnings announcements. I think that may be the catalyst, so to speak, the excuse that they use to drop this sucker down. So if we get a little bit of a rally, I think we'll have a hard time getting past this 29.75-ish. That's on the cash. And then I think we can probably rotate lower for lower prices. Because like I said, now this whole phase 1 and even that whole bit about the baloney about 50 billion they're going to purchase in agriculture. It turns out Reuters did a good story on that. They're saying, hey, they're going to have to go, there's so many different things of hoops are going to have to jump to even get to that area. You see what I'm saying? So talk about putting the cart before the horse. So the more this market looks at this supposed trade, phase 1, rigmarole, market's probably going to be like, you know what, I don't care how much lipstick you put on that pig. It's a pig at the end of the day. Meaning, like I said, a lot of hullabaloo for a lot of bunch of nothing. So I think that may allow this S&P to go on and pair back. Gold trading relatively quiet. It has paired back. I mean, we saw a pretty good little sell-off on Friday. I even picked some up on the way down. Unfortunately, I was able to go in and clip out before it took another dip. But we kind of held in here. We came back and we've kind of pushed a little bit higher. We'll see. I think this is a tricky market to trade for right now. Crude oil, we can see here, we'll take a look here on this daily. You see right here coming in, and that's a very good level right there. And that's where the market ran out of gas immediately from the get-go on Sunday evening, which is right there at 54.88. And I was looking at it, and actually I tried to work an offer. I think it was 82 or 83. But it already started to slide back. But I didn't want to chase it because I usually don't trade crude in after-hours type market situations. So I said, I'll wait. But I probably shouldn't have waited because I knew the risk was $55. It wasn't even risking that much, but we just kept dripping a little bit lower. And then we came into Europe. We just dripped lower and lower and lower and lower. And we found some support down here. And I'll show you here. We came down to the 78%. I apologize, almost to the 61%. We're going to move into that. Did pick up for a few ticks here and there, but you can see here that we made this run almost all the way down to 52.74, and There was actually a good level at 52.55 on the daily. And I was pointing out to someone, there's doggone it. Because they were saying, they asked me, do you always trade the fibs? And I go, well, I try and do a confluence of the fib with the levels. And I was saying, hey, the 52.55 was offering a really good level on the daily, but that gives you an idea of what the risk is, okay? And then I try and see what the price action is. Obviously, you can see this market's been dripping lower and hitting. So I thought, well, we've hit some areas here. I actually got long even before then and caught like 20 cents. Not anything great. Obviously missed a lot of this chunk. I wasn't up. I was, sleeping. I woke up and we were already going lower. But I wanted to see how I was going to go in and trade as we came into today. And but we kept dipping a little bit lower. But this 52.55-ish area on a daily confluence with the 61%, I thought offered a decent area. Actually, you see the market kind of pushing up. We can wait till tomorrow. You don't have to force the hand. But the market, I thought, was overstretched. They just bought into this whole at the end. If you look at it, and actually to put this in context, that's why I thought the $55 area was a good area as far as what the risk was, and probably should have jumped on it at that time. And I'll show you what I mean. And because I mentioned here to the gentleman, I was saying, well, I'll also look at the price action. Now, generally, I scalp it / day trade it. But here's the deal. So we'd fallen, like a freaking rock, off a hill. And so we came down here and like, okay, we got a nice little mini hammer, so to speak. Okay, now we're going to take off. We come up here and we fall on our face. Come back here. Okay, well, now they're going to hold. Their test is low. Now we're going to take off. We come right back down. So we come back down. And so the market was having a real tough time. Not till the end of the week did the market start to move a little bit higher in fits and starts, move a little bit higher. And I thought, you know what? This market is very susceptible. And I mentioned to the guys, I go, this 54.43 is a good area here. We pushed higher, and I'm like, the risk here, you can see it right here. Now, I really didn't put it off of this low. I was just thinking 55. But really, if you look at the touches, that's what people always ask. Why do you put your support levels and risk levels, as opposed to the high and the low? I've said it, sound like a broken record, like my mom used to say. But how many people sold the high and how many people bought the low? I put it here for another good reason is this is where you see the volume, which is across the body touches. And of course, and that's confluence in here with the low here, confluence with the high here. That was a very good area. And that was there, like I said, right there, 55.82. If I remember correctly, in the Sunday session, I think the high was 85 or 87. And I was thinking they might push up a little bit higher to 92. Like I said, I don't like to trade in these after hours. I'm just getting back to trading crude. So you don't want to stick my head in the grinder, but that was a pretty decent area. I thought, well, the risk level is 55. So if they can pop up to 92, I'll take a chance. And they just started to drip a little bit low, and the rest is history. But other than that, let's go in and we'll look at the cross rates. So you can see here, the Aussie yen really gave back. Now we're kind of seeing this market come back in a little bit, but once again, hey, the proof is in the pudding. It's not me. It's just not me talking when I'm giving hit the old. He likes to use it. I'll use it right back. Your fake headline about this fake, deal, which is not really even a deal. Because the point was you weren't going to, with all the stuff that had happened, you weren't going to resolve that in 2 or 3 days. And then obviously one party is desperate for any kind of a success. So that's what I'm saying. I knew it was going to be a fake deal. I thought maybe they might even try and stretch it. Heck, this market saw that market saw that through, looking through a lace curtain for all it was, just a bunch of fake headlines. So quickly, I mean, we didn't even get a bop on the Aussie yen. All these markets quickly sold off. I mean, they weren't even buying this thing right from the get-go. But we are showing him. I thought Blake made a pretty good point in regards to the on the face, if you saw that, and he was talking about the euro Kiwi, and you can see here it's been in this trap. I think Steve had pointed out about this triangle. I hadn't seen his stuff until a little bit later, but I just saw on Sunday, like, oh, wow, there's a little triangle. I'm not a triangle kind of guy, but I saw here, look, it's been trading in a tight range. I wasn't sure which way it was going to go in and break out. And on the analysis we had put, the Euro Kiwi is waiting to break out from a tight range. And, of course, this analysis is done before the Sunday Open. From the tight range, the pairs endured for over a week Initial upside breakout at 75.03 with a potential move to 76. Downside breakout, well, obviously we're not worried about the downside breakout. But the point that Blake was making was that when we, hang on a moment, bear with me one moment. Hang on. Okay, someone's asking about the daily webinar. I'm like, it's on every day at the same time. The only exception was, last week I had to go to a dental appointment. So anyway, so Blake had made the point was that the Euro Kiwi is a quite often when you see this thing move higher, it's a risk off. Essentially, if you're looking for the market to move lower, potentially, you're going to see the Euro gain against that. Quite often, the Aussie and the Kiwis are always considered huge risk on currencies. That's where I'm like, the Aussie's really been, like I said, the Aussie yen right from the get-go came lower right on the Sunday session. But Blake's take was that the euro has essentially been, because it's been driven so low, has been used as a funding currency. So you sell it and use it to buy other currencies. And so potentially we could see the same breakout. If we're looking for equities to move lower, we think are going to move lower. So potentially we can see the same move much higher. I look at stuff on the shorter term basis, but I think Blake was pointing out from a weekly, and we can take a look at that. So potentially the thing could really start to break out. We'll see what happens. But of course, our focus here is on a much shorter time frame. Coming across, as I said, you're seeing, and here on the 2-hour chart, you're seeing a nice, I wouldn't say the wick's not super long to say it's a shooting star, but I mean, you look at here, if you give it from a perspective standpoint, here, pull this back on this 2-hour chart right here. It did take out these highs, and that's interesting here. And now we're starting to pair back. So this was a nice little run up just off of this one here. The sturdy nod rallied to resistance level 86.57, falling short of 8,700 with a blah, 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 blah. We'll move on. Combination of Brexit headlines. So what we're looking for is if it were to break up towards this 11,750. Well, it did take out the highs, and now you've got this. The wick might be a little bit long for a gravestone doji, but nonetheless, that's not a bullish configuration, because you got this little hanging man come back. So then you're like, whoa, we took out the lows. Now we're going to move higher. We move higher, but then you see the market finish at the lows. So usually that potential a much lower move. Probably be looking for the market. You see the most touches here. At least for the market come down to about 84.58. We shall see. So that's about all we have for today. Like I said, I'm just wanted to let's go and move back in here to this screen. Bear with me. And you can see crude oil after the 61%, we're moving a little bit higher. Like I said, what I like to do is I try and look at a confluence of not only the support levels here, but and the fib, and then what the price action is. But also I looked on the daily, and this 52.55 was offering a pretty good area. So I was telling the gentleman, I go, you come down here, then, I'm looking also at the price action, but there you had a nice confluence there. The 52.74 that came across here, but also 52.55 on the daily. And look, we've already come off quite a bit, and now you're seeing the market, move up, higher. But like I said, it's been pretty light activity. Gold, I can't figure out gold right now. I was lucky to clip out of this one and get out with my little gains intact, and little they were. I ended up trying to catch this knife on Friday, and I'm lucky I came out okay. Euro's trading relatively quiet. And we shall see, but I still think that the S&Ps will work lower. I think that, once again, peeps are going to be shooting holes in this whole trade nonsense over the next few days. And I think Joe Perry made a good point. I think the earnings will probably be the catalyst where the market finds an excuse to, kick grandma down the stairs as far as the market falling. Anyway, that's all we have. Thanks for joining us here on the FX Daily Roundup. Good luck trading on a very quiet day.